And Bitcoin's actually holding up okay in that sort of world, I still think. 93 and a half with a very, very strong dollar and stocks looking like they may be starting to break down a little bit lower feels okay. Definitely doesn't feel as though we've fallen out of bed. This 92K level or 91 and a half, let's say, has been a point of resistance kind of since the election, and that's held up again. And yeah, AI still seems to be the main bid. Brad, what's your take on stuff? I saw, and it's already becoming kind of an infamous post of the banana singularity being spoken about. What is the banana singularity and why are we all saved?
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all fucked? Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote, I think, in response to you, Ovi, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017 and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017.
Raoul Pal, the visionary founder and CEO of Real Vision, shares intriguing insights on the market's latest phase he calls the banana zone. With a peculiar yet fitting analogy, Pal draws comparisons between the current crypto market's movements and the curved trajectory of a banana. As the standout cryptocurrency, Bitcoin witnessed a striking all-time high. The cryptosphere stays on its toes, anticipating the next wave in this roller coaster ride. Welcome back to Investocracy Crypto.
So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now after that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine.
Do you think it looks like global liquidity has kind of been on this downward trend since 2021, and like you said, looked like it was going to turn up second half of last year, and then now the Fed seems to be hovering and all this sort of stuff. And Bitcoin's just gone higher. Like, do you think there's also been a slight breakdown of this as well? Like, obviously we had the ETFs come in, and now we've got the Trump trade coming in. Like, I know, so obviously there is this reductive kind of correlation to everything just being liquidity. But do you think also crypto can just go higher because it's found product market fit in AI and found political support and probably is going to find institutional support with a bunch of different ETFs? Like, do you think there's a case for that as well?
It normally decouples at this point in the cycle anyway, because it starts forward looking. Now, liquidity is actually financial conditions drive liquidity. And so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And, we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like, the institutions here, it's amazing. Well, it has to be. If you want 100% rise, you need larger pools of capital now because it's a much bigger market.
The world of cryptocurrency never falls short of surprises. And recently, it's been all about the banana zone, as Raoul Pal euphorically calls it. The essence of this phase is akin to the unpredictability of a banana peel. One moment, it's all smooth sailing, and the next, you're tumbling. With Bitcoin recently bouncing back to trade around $94,800, marking a 3.14% recovery after an abrupt 10% crash, the market is indeed behaving as unpredictable as Pal predicted.
Look, overall, the trends are all right. And we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for. And everyone's at kind of a max fear right now. It's crazy. But that's a good setup, right? It's just a good setup for the year.
It feels like to me, the main thing that people are worried about is rates. Like, everyone's somehow fallen back in, like degenerated, like, oh my God, we're getting rate cuts, and this is the thing that's going to just like turbo send us, almost ignoring the fact that we've rallied a lot in the last 2 years because of other things, such as like the big AI boom, and just kind of like this new paradigm where we can have like higher rates and equity growth. So it's almost like everyone's just forgotten about that. We're like, oh no, we're going to have not only are we not going to have hikes, it's just fewer rate cuts in 2025. Like, forget, hikes. But people are freaking out as if there are going to be hikes, but really they're just going to be fewer rate cuts. So it seems very overblown to me, because when you take a step back, okay, maybe we have no rate cuts for 2025, maybe we just have fewer rate cuts. But even if rates stay where they are, like, it's very different to maybe the PTSD people have from 2 years ago when inflation hit 9%. And when it hit 9%, where was the base rate? Like 2.5% or something like that. Whereas right now, you're gonna have a base rate in the context of like 4 to 5% or 4.5 to 5, and wherever it ends up settling. And inflation is around 3. So it's just a very different
inflation is the discounting mechanism, not rates.
Exactly. That's exactly yeah. Exactly,
and so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top.
The euphoric rise for altcoins is akin to striking the jackpot, perhaps like finding the elusive golden banana in the bunch. Finally, we approach what Pal coins as Banana Zone Phase 3, the concentration phase. Here, the core winning cryptocurrencies, possibly including Bitcoin, take the main stage to ascend to new altitudes, akin to a banana tree reaching its full harvest. Charts light up, discussions ignite, and among it all, investors, equipped with Pal's analogy, pursue this ripening opportunity. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
They tend not to like to give the Chinese direct swap lines. So the general mechanism is you give it to Japan. So you get the Japanese to weaken the dollar. And they showed their hand a while ago when they weakened the yen. The strengthening the yen. Once they strengthen the yen, that injects liquidity into the system. The largest part of the euro-dollar market is the Japanese banks. So you need to give Japanese banks liquidity and they'll recycle it into China because they don't often like to give the Chinese direct swap lines. So whatever the mechanism is, the European banks and the South Koreans are also involved in the euro-dollar market, but it's really the Japanese. So usually you get the signal from Japan first that they start to say, we've had enough of the currency being this strong or this weak, and then it starts happening.
Which we did see a little bit of last year, right?
Exactly.
That's right.
So, and the market did have a little bit of a freak out when that happened last time. So maybe around about the time that does happen, we will see another freak out. Do you think away from crypto, there is still this concept of the banana zone too? Do you think macro might also decouple from crypto here a little bit though?
No, I think the business cycle is still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
As we watch the market evolve, the forecast remains bright with possibilities, riding the palm's gentle scurry windward. Current market analyses suggest Bitcoin may not only stabilize but perhaps embark on another historic rise. As Pal and his followers eagerly anticipate the banana singularity, it all boils down to the readiness of the market participants to seize the moment. But how do you perceive the crypto roller coaster? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.